18th of September. I'm going to start off by just taking a kind of a look at some of the equity movement that we've seen predominantly in the US over the last few sessions. This is pretty much here what I'm showing you on my chart, the S&P over the last 3 days. Now, if you remember rightly, before we had the big sell-off on Friday, which was really ignited by Fed's Rosengren, who made those hawkish comments at the time, people getting worried about the real prospect of a rate hike forthcoming next week, and that prompted equities to sell off. One of the biggest moves, as we said yesterday, one of the biggest moves that we had on Friday in 2 months. Before that, there was no plus or minus 1% sessions for, as I said, that period of time. But now we've had 3 days in a row where essentially you've had this move, you've then had the oil recovery and the Brainard comments, and now you've had yesterday's move as well, just to boot. So, 3 big moves that we've had in the market as we continue this main dominant macro theme of will they, won't they, Federal Reserve take action at the Sep 21st meeting. So equities certainly have started to liven up a little bit after a very quiet summer period. But one other thing to also keep an eye on at this present point is crude oil, because that too has seen some fairly interesting moves of late. Now, showing with you here a chart on 30-minute candles. This was 9 o'clock. And although prices haven't really deviated too much from that level there, from where we were trading at that point, that was when the IEA released their report yesterday, which did draw quite a bit of attention in the press and certainly did contribute to some of the downside pressure that ultimately was seen through the European morning when that report came out, and then obviously as well taking up a bit of momentum as well through the NYMEX Pit Open and the first part of the US session. Did move roughly around $1 lower to its low point on the back of a report. What that said yesterday was that the agency, the IEA, that supply will continue to outpace demand, at least through the first half of 2017, and that it looks like we may have to wait a while longer for the market to return to balance. Let me put this in graphical terms for you so it makes a bit more sense, just transitioning my screen here. This is a picture of the IEA, International Energy Agency, so one of the big players. If you're an oil trader, certainly you will be monitoring their latest analysis and what they have to say on a regular basis. You can see here, it's the outlook going forward. Remember, as I was saying yesterday, it's the market moves on expectation, not so much the actual reality of what's happening at this moment. It's what might the future hold is what the market will then value that asset at. And at this point, you can see here revisions to demand growth forecasts. So this is really key, because from this current area here, growth is at a 2-year low, and then going through the rest of this year into 2017, demand is seen as less than was anticipated when they last issued their forecasts. Therefore, the amount of glut or over surplus of oil in the market is going to be longer before that can be fully diminished or taken back, and that's a net negative then for oil prices. Another quite interesting graphic that I saw this morning in a Bloomberg article was this one, and it kind of really highlights the strategy, or the new strategy, that OPEC seem to be adopting, particularly from the Saudi-Russian front. If you remember, a few weeks ago, you couldn't really go a session without hearing a source comment, Saudi type, going into the meeting that was happening at Algiers, or what's actually happening at the end of this month. That's still happening. However, you'll notice that no one's saying anything at this point. And why is that? Well, what this chart is showing you here is 2 things. The blue line is the price of WTI crude, you can see here, and it's the white line that's more interesting, because this is a measurement of the short positions, short speculative futures positions in the market. So this is something which is available. I think it's every Tuesday evening this comes out. It's released by the exchange, and you can see essentially the positioning of futures contracts in the market. So you can see if the market is overly long, overly short, and so on. What's interesting here is then when OPEC announced the Algiers talks, and they were kind of at the most vocal, if you like, about doing things. That was when short positions in the market were at their most potent, if you like, at the highest level of volume. So what they tried to do is counter that by talking about, or potentially coordinate a production freeze or cut in production, so on and so forth. That's made the people in their shorts a bit scared. Then they've bailed, and what we've had then is a dramatic collapse in the amounts of short positionings in WTI crude, and that's what's ultimately helped stabilize some of the price activity that we had. If you remember, putting crude on a slightly longer dated, we've seen a real journey in crude in quite a short period of time, really. If you look back the last month, so going back to the middle of August, we were up close to $50. We then fell all the way down to kind of 43 type region. Before then, we've kind of settled now around this 45 type level. So certainly seeing some pretty sizable moves, but certainly a little bit more stabilization going into this important meeting at the end of the month. And of course, the actual scheduled OPEC meeting, that's not until November, so we have to wait a little longer for that to come. Just looking at the S&P, actually, it's on my chart. The future's just come back to flat now, so we're actually back to unchanged on the session. We're pretty much mid-range of the kind of Rosengren sell-off. I would say that looking really around those lows of yesterday, maybe to contain the downside price action as a key support level going forward for the time being. But certainly crude to keep an eye on as well for direction of the equity markets as ever on a correlation basis. This was just what I was just showing you here on the S&P chart, that being probably the next near-term target on the downside, that cluster of price action that we had where we bounced, got chopped up a little bit, but around that S1 level. Just sticking with oil though for the time being, a quick look at last night's API crude oil inventories. Didn't really have too much of a sustained reaction actually on prices. Nothing to the same degree as what we had yesterday. You can see here the black blobs, black bars, they denote the numbers from last night. These numbers in green actually are last week's numbers. Of course, we had that biggest drawdown in the headline crude. These are actually the DOEs. That was 14.5 million. Now that was the second largest on record. Just for a statistical point of view, 15.2 draw is the record. So that was the most since 1999, but we bounced back. The actual number in the APIs last night was a build of 1.4 million. However, that was short of analyst expectations of a build of 4 million. The other numbers were, in terms of Cushing, we had a drawdown of 1.12 million. That's the black bar, so slightly larger draw than the DOEs of last week, but pretty much bang on the same amount as the Genscape Cushing numbers. If you remember those close correlations that I showed you yesterday between what Genscape generally report and what the EIA report. Gasoline, really not too much action there, but distillates was a little bit more interesting. We're talking about the highest build levels that we've had since the start of the year. That number last night was a build of 5.3 million. But again, nothing like the kind of size of numbers that we had last week. If anything, anyone who is expecting potentially a post-hurricane build in the headline figure were a little bit disappointed. The Cushing number was a drawdown, a fairly big size, but matching the Genscape, so the market's kind of prepared for that. So again, not too much reaction in the price of crude. Just switching back to the charts for the moment. A couple of other things just to get you up to speed. Cable was a big mover yesterday. You can see that. Let me just highlight the... this bar here was the release, of course, of UK CPI. Now, UK CPI is a bit of a funny one because everyone's been anticipating prices to have shot higher given the big drop we had in the pound post-Brexit, and that really has not occurred. Now, the interesting thing here is that although that data was only 0.1 lower than expected, you could argue, well, why did we have such a big move to the downside? Well, I think you've got to look at it in terms of how the market is perceiving inflation data going forward. And although the number on a year-on-year basis yesterday for UK CPI was expected at 0.7%, the market has certainly positioned itself for upside surprises, i.e. the context of, as we were just describing, the prices should theoretically have moved higher. That was certainly the balance of risk was to the upside. So even though if you had a 0.1 reading above expectations yesterday, I think you would have not seen anything like the same size of the move in reverse for cable. It's because UK data just continues to surprise at this point. We've seen the strength in the likes of services and manufacturing. What we're seeing now is actually inflation or prices in the short term, at least, have not had the sort of shock that we were anticipating, and 0.1 is actually on the wrong side of what the market was saying, and so hence you get a more powerful move. Then you combine that with technicals. You had the kind of let me just mark up, you had the Friday, the Monday low points coinciding around these levels. That exacerbated potentially some of the selling. 132 gave way as well, so a couple of key price points also to just keep in mind were taken out. Now, looking at this on a intraday for today, you can see here that 132.36, which kind of marks those two low points which we busted through yesterday. That is actually today's pivot level, and you can see here we got up to close to testing it, and we found initially a bit of resistance, and we've turned lower since a quick look at pivot this morning. Now, looking at economic data from the UK, there are a few things to look out for. 9:30, we do have the latest jobs data. Now, I would say the jobs part of the UK economy is probably the least influential in terms of monetary policy and therefore net market impact at the moment. That's because, generally speaking, as you can see here from the unemployment rate, the situation at the moment is fairly robust. In fact, UK unemployment rate of 4.9%. Last month, that was in line with expectations, so remains its lowest level since the July-September period of 2005. So UK unemployment is in a good state of affairs at the moment. The jobless claims change as well dropped considerably last week, which is also a net positive sign. Nonetheless, though, these are, I would say, classified as tier 1 data points, so will provide a bit of short-term noise to sterling currency and therefore the cable pair. So definitely it would be something I'd be looking at. If this number, the jobless claims change, starts to shoot up towards what we were seeing in spring of this year, so up around 14,000 levels or above, then certainly that could impart some renewed downside pressure in the pound, and certainly yesterday's low print at 131.67 could become back in sight, given we're only around 40 pips from that level at the moment. So that's kind of your state of play for cable. One other chart as well I just want to quickly share with you is this one, because this is one that's kind of gone a little bit unnoticed more recently, but this is dollar yen, i.e. this is the dollar yen, so the pair moving up denotes yen weakness, and we've seen a large bout of weakness more recently. The overnight session, actually, we moved quite a large size from around 102.50 all the way up nearly a full point. But it's really this area here that I want to isolate. There was a key comment that came out with that circle that I've just highlighted here on the dollar yen chart. Does anyone know what comments came out last night shortly after 6 p.m? I would be expecting all of you to have done your look back in the news, your headlines. If you looked at the charts and saw dollar yen rally like it has done, very unlikely it would have just done that on its own. Likelihood is there would have been a news catalyst. Does anyone know what that news catalyst was? If you can put it into the chat for me. Okay, good. Christian in the new room, month 1, well done. Tony and James, I expect nonetheless from you guys in the live room. So more and more domestic press articles suggesting that the BOJ, which don't forget have their interest rate meeting the same day as the Fed. So it was the Nikkei newspaper released an article last night, shortly after 6 p.m. London time, that said the BOJ board is expected to conclude in its comprehensive assessment next week that the benefits of negative rates outweigh the side effects. The article suggesting the BOJ is exploring the idea of cutting rates further with asset purchase expansion now near their effective limit. So we had some comments similar to this in the Kyoto news. Now you've got the Nikkei news. Just as a reference point, Kyoto and Nikkei news are the two major financial publications that you get in Japan. If those two newspapers are saying something, that's like the Wall Street Journal and the FT in the Western world. So certainly they have the most informed sources, I would say, and all those sources are starting to line up. Greater expectation is starting to build that the BOJ are seriously going to be contemplating, given what this article was saying, they've exhausted other QE type measures, now they need to take negative interest rates, essentially, further negative. So these are things you've got to keep an eye on as well as we go in. Will, obviously a big component of using the yen as a barometer of sentiment, well, you've got to be a little bit careful with correlations as well, because not only do you have the correlation view, but now also you're likely to see a monetary policy play directly influenced by expectations surrounding the BOJ. So something for you guys to just keep an eye on going forward. Let me just, this was the dollar yen chart that I was just sharing. Tony, thank you for the heads up. So that circle there was what I was suggesting when the comment came out last night. Immediate bid in dollar yen. Then the Asian session kicks off. Remember, Japanese markets don't get underway till it's gone midnight. Then you get the second powerful move once Japan markets are fully underway. Then this all makes complete sense in terms of timing. And then what do we have here? This is the European morning. So when you think about the way that news dissemination works and the timing, that's when the news hit. That was the North American markets trading the move. That's when Japanese markets opened. And obviously that's the most sizable move, given that's their direct central bank and they're going to be the most highest in volume, likely trading the move outright. Then Europe comes in and it gets lifted again. So you can see the three stages of the different North American, Japanese, Asian, and UK European markets all reacting to the same news. Okay, moving on. Just a quick look at the calendar then. For today's session, as mentioned, UK data at 9:30. Otherwise, it is pretty quiet today. Don't forget, Thursday is the data dump out of the US, and that will be a very important day in order to kind of put the nail in the coffin on the potential for a September hike. You've got the European industrial production numbers at 10 o'clock. I would say worth watching, but unlikely to have a great ramification on the market. The DOEs, of course, will provide volatility in the short term for crude oil prices. If the numbers do come out enough out of line, could have ramifications as well for the equity market. Okay guys, going to finish there. So enjoy your session. I'll catch you in the chat. Any questions, please do let me know. Enjoy your day.